Very good afternoon, everybody. Welcome to a special edition of Friday Drinks. I mean, yesterday we had Friday Drinks and we were celebrating 60 years of Nico's Diamond. But we felt it necessary to have another show, primarily because we had the mid-year budgetary review that was done by Prof. Mutuli. So I think, by popular demand, everybody wants to know what exactly we think about it. So that's why we're doing this special edition. But thank you very much for the support. We want to do something different today. The first thing that we would like you to do is to just like. So I'm going to ask the crew to tell us, I think we want to get to, 100 likes? 10,000 subscribers, but so subscribe, but likes, right now, just click on the like button. We want to get to at least 100 likes. How many likes do we have now?
3. How many? 5.
Okay.
Yes.
All right. Okay.
This experiment.
Yeah. So let's have as many likes as possible, and that will actually help the channel itself. And then, sir, you drank yesterday. Today you're drinking. The weekend you're going to be drinking. Is your blood going to be okay?
My blood?
Yes. We're worried about your constitution.
Nah, I think I'll be fine. The show is called Friday Drinks.
Yeah,
These
but
are
you
just
had,
props.
On Thursday you had a drink. On Friday you have a drink.
And okay, you're going somewhere with this. Actually,
Yeah.
No. I'll be fine.
You'll be fine.
I'll be fine.
Okay. So tell us, what are you drinking?
I'm drinking bourbon. It's an interesting version of Maker's Mark called 46, number 46. That's they finished it in French oak, and it gives it an extra spiciness and vanilla flavor. So that's what I'm going with today.
Okay.
And you're drinking fruit juice.
Yeah. Someone was generous enough to actually give us and donate free juice, and that's exactly what I'm going to do. And thank you very much to Anonymous, and may we always continue to have as many, of this gifts as possible. To get right into it, and the way we want to do it is, as we usually do, is to do the good, the bad, and the ugly. But just first of all, just give me your summary of Mtuli and what he presented, what your thoughts are.
Look, at a very high level, the numbers look good. Okay, we rebased our GDP to north of 40 billion. Our debt to GDP ratio is now one of the best at 44%. We are running a very small deficit of less than 1% of GDP. Our collections, from a revenue perspective, were lower than the target, but significantly higher than what we collected last year. We have a current account surplus. Exports are higher. Diaspora remittances are higher. So, at a very high level, the numbers are good. And if you believe the forecast, we're looking at 6% GDP growth, which would make us the fastest growing economy in sub-Saharan Africa, which is fantastic. So the question for me is, to what extent are these numbers credible? Because it's one thing to actually put the numbers out there, and it's another thing to juxtapose them against the lived experience of your typical Zimbabwean, and whether somebody sitting in Joburg or London allocating capital in this part of the world is now thinking, okay, I'm probably underweight Zim because it's the fastest growing economy in sub-Saharan Africa. It's experiencing this revival in agriculture and manufacturing and mining. Perhaps we need to participate more. Are we actually going to see that change in capital allocation? Are those conversations happening, because we presented these numbers? And I think that's where, that's where my concerns lie. That's where the question mark comes in, to say, does that translate into renewed interest from capital outside the country into Zimbabwe, is everybody feeling exuberant? Are you doubling down in your businesses because you see this growth and this excitement in the economy, or you've got a more bearish take based on what you actually see transacting day to day? So that's really, you've got this wonderful picture that's been presented in the budget, and then the reality in terms of what we're seeing in our businesses and what capital allocators, the decisions they're making. Like, how do you reconcile the two?
Okay, so my take is a very simple and straightforward one, in that for as many years as we have been on this earth and we've listened to the budget was never a propaganda item. It wasn't one where you really gloss over the details and you say what a glowing story Zimbabwe is. I think that we've got the Ministry of Information to do that. What we really look forward to with Treasury are the core numbers, and sober analysis, because people make decisions based on this. And I think we've said this numerous times, and with our guests when they come here. And more often than not, they tell us, you know what, we don't believe those numbers. That's why we're not making decisions based on those numbers. So I think there's a widening gap when Professor Mtuli comes in and he tells us that he has rebased the economy by 40%. And he last did this 6 years ago. And we'll get into the details and the weeds of why he has done this. But when you compare his current numbers media, so okay, you've rebased the economy and you've said the economy has actually grown and it's actually a $44 billion economy. And you say all these glowing things, some of which you've highlighted. But then when you look at the numbers between last year and this year, right now, they've spent all the money that they collected up to mid-year. But according to their budget, their 2024 budget, their run rate is 35%. Yet they've spent all the money that they've collected. So we can see that there's huge demand for expenditure, but the revenues are not running in tandem with that huge demand. So it tells us that actually on the ground, first of all, if you're being generous, if you're being extremely generous to the minister and to the government, then nothing actually has changed. That whatever they said last year and whatever they were operating under last year is exactly the same premise in which they're operating this year.
I think if you're being generous, what you'd actually say is that they are spending less than budget because they're being frugal and disciplined.
No, they're actually spending slightly more than budget. They're spending slightly more than budget, but unfortunately, they've only collected 35% of what they wanted to collect by this time around. So the ministries are not spending. They only spend 35%, primarily because the revenue is just not there. So last year, for the full year 2025, they're expecting revenue to be 270 billion ZiG. But so far we've only done 100 billion, and they've spent about 101 billion. So that tells you that they're just not collecting as much as they say they want to. And then based on
But doesn't that speak to some discipline? Like in the context of Zimbabwe historically, where we've seen such a constraint when we've had a local currency, that's always induced reckless printing. And to the minister or to the central bank's credit, we haven't seen reckless printing this year.
So you need to contextualize that, because they've actually then defaulted on a number of payments. So they haven't paid their suppliers. We know this. The seed suppliers have continuously complained. We know that farmers have complained, and we know that there are contractors that haven't been paid. So they haven't paid those. They haven't paid the overdue TBs from last year and this year as well. They haven't paid. So we know that there's pressure. Right, from their creditors. They haven't paid their creditors, but they haven't also collected what they envisaged they would collect. And then around that, they now come and they tell us that actually the economy is 40% of what it actually is.
It's 40% bigger than what the base was.
So I think that that's a reality that nobody's experiencing, and the numbers don't speak to that. And I think that they're doing a disservice to not just themselves, but to the market in general. The other thing that I actually wanted to highlight, which I think was a misnomer of some sort, because everything that we've learned of the manufacturing sector is that we're operating at half capacity. We just not producing as much as we should. But now they've come out and they've said that actually the manufacturing sector, from the rebasing, not from the growth, but just purely the rebasing, they've rebased the manufacturing sector by 1,200%.
That
means that they were out. So whatever number they had in 2019, they said, actually, we were out by 1,200%. So they've rebased the manufacturing sector by that. And by that, it turns out that our manufacturing sector is now the largest sector in the economy. It's no longer the wholesale retail sector, which is actually reduced to number 2 and has seen the biggest decline. Because it used to be 19% of our economy, it's now
19,
reduced. 19% of our economy is reduced to about, I think, 12% of our economy. Whereas I think mining, you can sort of believe that, which is now around 14%. The big problem with mining is that that's purely driven by price. It has nothing to do with actual volumes, because we're still producing. If we look
gold
at
volumes have gone up.
Well, it's more or less
From 17 tons to about 37.
Yeah. We're still going to produce less than 40 tons of gold. Right. So in terms of volumes, we haven't really increased that much, but that benefit is purely price. So what it means is when the cycle then goes down, we're likely to see mining contribution, our sector contribution, actually coming down. So, but anyway, let's stick to manufacturing and see if what they're telling us about manufacturing is the lived reality of people. Because what they're actually telling us is our economy is now determined by home industries. So let's take Delta, and I'm using Delta just as an example, that whatever Delta is producing and whatever Varum is producing, whatever the formal guys are producing in terms of manufacturing, because those are actually our biggest manufacturer. So our biggest manufacturer in this country is Delta. Now, they're coming back to us and telling us that actually that is on average 25% of production. That there is 75% of people who are making what Delta is making, what Varum is making, and it's home industries. And we hadn't captured that.
Oh, you're talking about the formal, informal sector dichotomy.
Exactly. Okay. So they're saying that the economy is now 77% informal, 76% informal. To capture that, so that people really understand what's happening here, is they're literally saying that Delta and Varum, everyone who's in formal manufacturing, and Delta being the largest manufacturer in Zimbabwe, it's now 25%. And 75%, it's guys who are making this stuff at home. So it's not guys who are trading, who are bringing it in from Mozambique and from Zambia, because those will be captured by wholesale. But it's guys who are literally making this stuff at home, and they're selling it in the informal sector. Now, if you believe that, then I don't know. But to dispute those numbers, there are easy ways in which we can cross-check these numbers. Fuel imports have actually reduced. So our highest level of fuel imports was actually around, even in volumes as well as in quantities and value, was around 2019, 2020. And I think that's when we had really serious, problems. But the other thing is electricity. We're not producing as much electricity, so we're not importing as much fuel. We're not producing as much electricity. And yet you tell me that the informal sector is now contributing 76% of our GDP.
But it doesn't have to be manufacturing, informal sector. It can be other sectors of the economy that are informal that constitute 76% of the economy.
We're saying on average. So you.
No, I hear you, but what I'm saying is I don't think anybody in the informal sector is competing with Delta in terms of producing sparkling beverages or lager beer.
But that's because the largest manufacturer in Zimbabwe is Delta.
Yes, I hear you.
So that number will tilt towards
But all I'm saying is that the informal sector has...
Okay, what else are they manufacturing? Because the home industry is like CSO was already captured.
Yes.
So they're saying since 2019, for every guy we recorded in 2019, there are 12 other guys who are doing not just as much in terms of production, but in terms of profitability.
No, so my reading of it is a little bit different. I think that it's conceivable that 76% of the economy is informal, but it won't be that 76%. If we were to unpack it and analyze it, it wouldn't be manufacturing, right? Because manufacturing carbonated soft drinks is a capital-intensive business that is not amenable to informalization, but perhaps smuggling in second-hand clothing is amenable to the informal sector.
So if you smuggle, that is not recorded under manufacturing. And remember, I said the reason why I zeroed in on manufacturing is because the largest subsector is now manufacturing. Somebody has just disturbed our line of thinking. I shall not say who. No, but clearly somebody is overworked. But anyway, let's get back to... So here I'm just focusing purely on manufacturing. So if you look at manufacturing and the growth, the rebase in manufacturing, it's 1,200% increase in manufacturing.
Yeah, that's
other sectors.
That's just incredulous.
The other
that's
sectors,
incredulous.
just the rebasing. They're saying, you know what? Because it's now the largest subsector in our economy, and it has grown it's been rebased by 1,200%.
Yeah, that doesn't make sense to me.
And does that comport with our reality? And I'm saying it doesn't, because the largest manufacturer. Now, you are right that as far as the beverages sector is concerned, it may not be exactly 25 to 75%, but it means a large component is now in the informal sector.
Yeah, which doesn't make sense either.
It does not make any sense whatsoever. And why they focused on manufacturing, I have an idea why. It's because it's... Everywhere else, we can prove that it's actually not making sense. Because if it was the retail sector, we know what's actually happening with the retail sector.
Oh, so basically saying that's the balancing number.
I think it's a balancing number.
If we put out this new 44 billion GDP economy, it's easy to track what's happening in mining and in wholesale and retail. It's easy to track what's happening in agriculture. Yeah. So, but manufacturing is a bit murky. It's not well understood. It's harder to cast aspersions at the official numbers. So that's where, that's why it would be
I think so. But, I could be wrong. And, I'm quite happy to hear the other arguments on the other side of the aisle and why they think that our economy is that size. But now let's get into the details on some of the things that we're seeing. And let's start with, the debt and the deficit. Maybe you want to get into that.
Yeah, so at a high level, I find that quite interesting from, investment perspective, because if we're saying that our debt to GDP ratio is only 44% and that our deficit as a percentage of GDP is less than 1%, it means we're doing great. So we should be able to raise money in global capital markets because our numbers are better than pretty much every other country on the planet. But there's a contradiction in the same budget statement where we are paying 12.5% on one-year Treasury Bills. So a country like Japan has a debt to GDP ratio of 200%, and they're able to borrow 30-year paper at less than 5%. So if we, have this great balance sheet, why is the market penalizing us and making us pay this double-digit interest rate on relatively short-term debt? Right? There's a disconnect.
And TBs are running at a discount of upwards of 60%.
It's kind of like your accountant is telling me you're doing fantastic, and your bank is telling me you're broke, who should I believe?
Maybe I'm not banking. I'm not banking my money. But it's interesting that you bring out the banking, because part of the rebasing, so banking sector actually increase their contribution to GDP in a much bigger economy, and they're saying that the banking sector has actually grown.
But we know this is not true, because you've analyzed this before. If you look at the aggregate deposits in the formal sector, aggregate loan books, and you compare them to where we were during the GNU, the banking sector for sure has shrunk. That like this,
well, even compared to last year, it is actually it's almost stagnant. But they're telling us that actually, so as a subsector, it has actually grown.
It doesn't make any sense to me. That's a curious assertion to make on the part of Treasury, because the numbers are out there. And if you interact with the bankers, they'll tell you it's very difficult to write new loans. They're not writing. It's very difficult to actually get tenure for debt in the formal banking sector longer than 6 months.
And if it were true, also, there's a secondary worry that you have, because when you look at the financial services sector, you're worried about the quality of their profits, because we know that a lot of their profits is just purely revaluation.
Yeah, and probably they're not being as conservative as they ought to be regarding impairments. So yeah, there's question marks there. The liquidity is not there, both in ZiG and US dollars. And then we've had this incredible stability on ZiG over the last 6 months. So why isn't it fully fungible, right? If the central bank is committed to not printing and to ZiG gaining market share, it should be fully fungible. You should be able to get a ZiG Visa or MasterCard and swipe in hard currency in Zimbabwe and elsewhere in the world. It should be completely fungible, but it's not. And this begs the question, why not? What is holding it back from flourishing? And I think, it speaks to a disconnect between what we want to present to the world, that there's stability, that the economy is growing and things are looking good, and perhaps not such a rosy picture.
True. Okay, so let's get into some of the details here. So outside of the rebasing, I think that one we've correctly dealt with that, don't believe the rebasing. Just look at the economy, look at just how you've been operating from last year, and you're probably correct if you just continue to operate under that particular framework and don't capture this exuberance that the minister is trying to push out there. But these are some of the good, what I would consider the good in the budget, or things that we see that we think are maybe believable and you could attest to. So the first thing is the rebound in agriculture. So we are going to see a 21.5% rebound in agriculture, following last year where we had a contraction of 18.1% in agriculture. I think that's a positive, and I think to a large extent we've seen that. We've seen that in tobacco, we've seen that in maize, perhaps not where we need to be, but you can sort of believe there is a rebound.
Things are significantly better in that space for sure.
Yeah, so I think that's a good that we can note there. And then, but unfortunately, because contribution of agriculture to GDP is now less than 9%, or just about 9%. So what that means is that, in effect, the bounce only gives us a technical bounce of about 2.5%. When you look at just its overall contribution to our economy. So although the rebound in agriculture is 21%, its impact on our growth, what they're considering growth, is only 2.5%. But like I said, this is the good, that agriculture, we can attest that compared to last year, we've seen something positive. The big problem is deliveries. We've seen significant deliveries to GMB, but we know that wheat farmers have not been paid. We know that seed companies have not been paid. So that's something that we are worried about. But in terms of deliveries, we can also confirm and attest that GMB can attest that they've actually received more in terms of deliveries. So that's a good. The other good thing is external sector has actually improved. So when you look at the total FX receipts, so these are foreign receipts, these have grown by 30% year on year to $6 billion, driven by diaspora and remittances. Thank you very much to everybody in the diaspora. That has increased by 10%. A big worry is actually private sector loans have increased by 35%. This is a big worry because, again, they tell us that the local banking sector is growing, but we all know that loans, as far as loans are concerned in the banking sector, it hasn't grown. And what people are now doing, the private sector is now doing, is now borrowing offshore. And they've borrowed up to about $1 billion. And this increase of 35%, while it is good that the private sector is finding capital, but I think it's a big worry because it's a big pressure on our FX receipts, because it means that these loans have to be serviced and people have to service those loans, and they're trusting that they will always earn in US dollars. We don't know what's going to happen as far as the US dollar is concerned, because we might quickly get into monocurrency. And also it could be some ways in which people are getting around the banking sector and our regulations and our 30%. People are thinking, it might be better to just get an offshore loan that you service and you get around RBZ and its retentions. What do you think?
I have a different take. I think it's a fantastic thing that we're able to borrow money offshore. Firstly, what it speaks to is confidence, because when someone deploys capital into jurisdiction like Zimbabwe that's got this very negative perception out there, it means that they've been able to pierce through the macroeconomic Zim risk issues and decide that they're still excited enough about the potential for a return, and they are confident that they're going to not just make a return but get their principal back at the end of whatever the credit tenure is. So I think it's a positive for the most part, in that Zimbabwean exporters are able to raise money offshore, backed by their export earnings, and actually grow their businesses.
I actually think it's just the way in which exporters are getting around the surrender requirements, which is not, that's why I put it as a good. It's still a good thing.
I don't think that, but having an offshore loan allows you to circumvent your surrender requirements, because No,
it does, because the first thing that you must do is you must pay off your loans before you're affected by the surrender.
Well, I think that firstly, because of our exchange control regime, you need to get exchange control approval to get offshore debt. And
they can't exactly say no.
So I think, from a surrender perspective, I suspect that the exchange control authorities would have had a conversation with the company to say, look, okay, fine, how are we going to ring fence what's due to us as well?
But that's what I'm saying.
So whatever
the leeway you have.
What the point I'm trying to make is, whatever circumvention is happening, it's not like a Nicodemus, right? They're having
no. It's
they
about
have a conversation.
No, it's
and
about
they agree, and so it's not a bad. Well,
it's two separate departments in the central bank. So to get your loan approved, it's very strict. It's as long as it's within the parameters, and I think it's LIBOR plus 4. As long as it's an offshore loan and it's LIBOR plus 4, then they're obligated to approve it. But that's one part of the exchange, not exchange control, but bank supervision.
Okay.
And then exchange control surrender has to do with exchange control.
Okay.
So as long as you can show that, I got a loan that's offshore, and those are the first people I'm going to service. But you need,
and look, I think that it's a positive, because the surrender requirement has actually been extremely detrimental to export businesses, because it's effectively a 30% tax on your revenue. So I think that's actually. I'm
just saying that's the way in which people are getting around.
Yeah, so I think it's a bright spot that people are figuring this out and they're able to raise capital offshore. I think that's fantastic.
Yeah, that's why I put it under good. It's actually a good. And we're seeing it because if we're saying that private sector loans have actually increased by 35%, that's great. But my problem was, as far as GDP is concerned, it means that it's the external banks that are creating the GDP and not the local financial services sector that's actually enjoying. Because it means that there's an appetite. If this appetite was real, it shows that there's an appetite for borrowing, and that is actually supported by exporters. But unfortunately, the local banks are not supporting this appetite.
Yeah, they don't have the capacity.
Well, we could go around in circles. And then another good, whether you believe it or not, there's a current account surplus of around $621 US, which is projected by year end. And I think that's somewhat a good thing.
No, it's a very good thing.
If you can sustain it in the long run. And then we've got banking sector capitalization. Most of the banks are well capitalized, and NPL ratios are below 3.3%. This is another good. Would you agree with that? And because banks 100%. Have just literally stopped lending, and I suppose that's why the NPL ratios have remained lower. Yep. But this has nothing to do with the state, but I suppose the banking sector itself. Then the bad. I think we've already talked about.
I'm so excited about the bad.
I think we've already talked about. No, we're just getting into the numbers.
Yeah.
We talked about rebasing. That's actually revised, and that pushes debt to GDP ratio down from 60% to 46%. But that's just purely a mirage. That's not really edged in our reality. We haven't been servicing our loans, nor have we looked at our debt arrears clearances and debt cancellation. That hasn't happened. Nothing has moved. But what we know is that just this year alone, they're projected to spend about $1 billion US of what we're collecting on interest payments. What's your take on that?
Yeah, it just tells us how dire the situation is. Because if our debt GDP ratio is so great and our deficit is so small, we should really be able to do a wholesale restructuring of our debt. 12.5% per annum, 12.5% for a one-year Treasury bill seems to be pretty expensive if our balance sheet is as good as it's being presented. So that's a challenge.
And interest payments are now closer to 15% of our tax revenues, or of our revenues, not just tax revenues. Of tax revenues, it's now getting closer to 18%. But of overall revenues, our interest payments on our debt, on current debt, not the old external debt that we owe, but on current debt, it's about $1 billion US. That's about 15% of, our revenues. That's a big worry, because that 15% could easily have gone to education. It could have gone elsewhere, where you could have done a whole lot more, but you're just literally just paying someone. So while the overall figure is actually our debt to GDP ratio has reduced, but the substance is that in absolute terms, our interest payments on our debt, because of high interest rates, is we're paying a whole lot more.
Yeah, and I think it speaks to another bad that you haven't touched on, which is obviously not in the statement, but the fact that we are learning about a whole bunch of these things for the very first time on the day of the budget statement and analyzing it and trying to understand it, speaks to a lack of outreach to the brain trust that is out there in capital markets, in the banking sector. We didn't have this conversation about the national accounts and debt and what sophisticated transactions we could conjure up to restructure it. Because I think that we've got the brain trust to actually figure out how to restructure our debt, and we've been talking about it for the longest time.
Yeah,
but year in, year out, it's not changing.
Yeah,
it's still we're talking about the same 22 billion.
Very true, very true. So another bad. That's something that we need to talk about is donor support. We saw Trump coming in, the Trump administration, and they've cut substantially on donor support. And the minister has come out very clearly that Treasury can confirm that withdrawal of development partner support has created unexpected fiscal pressure. Just to give you an idea, in the first half of this year, we only received about 125 million. And if you annualize that, we're probably going to get to 250. They think that we can get up to about 400 million in developmental support, but this is half of what we usually get. We usually get around 800 million US dollars.
Why is this a bad thing?
Because that was the plug in our healthcare system, in education, and a lot of our welfare systems. It's actually donor funded, and clearly that money is not there.
I beg to differ with you that it's a bad thing. I think it's a good thing. I think that we need to get our house in order. We can't go through life with a begging ball. We need to sort ourselves out. And I think this is actually a forcing function, right? Necessity is the mother of invention, right? The fact that, all this money that we were just getting for free as a handout is gone will force us to reimagine how we do things, and we will be better off in the long term. So it might hurt, and certainly some people are going to feel the pinch in the short term, but I think we're better off. I think aid has been pernicious for not just Zimbabwe, but for a lot of African states. It's just an excuse for the governments not to sharpen their pencils and get their act together. And I think that
I think you're right as far as the long term is concerned, but in the short term, we don't have anything that that will plug the gap, so to speak, because we're not collecting enough revenue. So we're expecting to be collecting around 9 to 10 billion in this year. It looks like we'll collect about 7 billion or 6 billion. If we're lucky, 7 billion.
Yep.
But because of that, we just don't have enough money for this extra 800 million to plug in the gap. So what's going to happen when we can't plug in the gap?
Do you think our government spends too little or too much? Just in principle at a high level?
Or too much.
Exactly. So we have to cut a bunch of things.
We have to make cuts.
Yes.
But we didn't see that, because I think that's the other thing. I was going to get to that as far as the ugly is concerned. That there's this song and dance we're making, but we know the reality. The expenditure and the revenues is telling us what the reality is. We need to cut. How is it possible that we've had a Minister of Finance and we've had Treasury for as long as we've had, and they're not willing to make the cuts? In terms of subsidies, in terms of the numbers of people that are actually employed, in terms of expenditure.
So I think it's a philosophical issue. I think that I think the leadership has a tax and spend mindset. It's not libertarian. They believe government's role is to solve most of everybody's problems instead of the other way around. And that's why we haven't seen these cuts. Even during the GNU, when we were our slogan was "Eat what you kill." Every time state revenue went up, government spending went up to match it. Right? We didn't choose to use the additional or the incremental revenue to pay down debt. So it's and I think across the political spectrum, from left to right, in this part of the world, we have this tax and spend, big government mentality, and I think that's what we need to advocate against and make the case that we would actually be much better off with a smaller government that spends significantly less money.
That's very, very true. I agree. So now, the ugly, I think we've talked about rebasing. I think that it was totally unnecessary. We're not politicians, so we'll never understand what they needed to rebase. But I think that that's an ugly, because if anybody in our economy believes that, then they're going to make the wrong decisions. We're not saying that there's no economy in Zimbabwe. There's actually a vibrant economy to a large extent. But I think that if you believe the 6% growth, and if you believe that the economy is 44 billion, and you make decisions based on that, I think you're going to make a major boo-boo. I think that you should be guided by your own historical understanding of the economy in your particular and peculiar sector, and be driven more by that.
I'm indifferent to the rebasing. I think it's I don't think it's a good idea to rebase. I think it doesn't do us any good from a credibility standpoint. But to me, it's academic. I think the major handicap of Zimbabwe's economy, the elephant in the room, so for me, my ugly would be that we didn't address the elephant in the room. Why do we have, which is what we're seeing around the currency. If we have currency stability and we have all these opportunities to invest and transact in US dollars, you should be seeing the foreign direct investments pouring into the economy. And we're not seeing that. And to the extent that I interact with foreign capital allocators, they all have the same gripe. I don't understand how to move money in and out of your country. And as long as I can't understand that, I'm just going to give Zim a miss.
Well, when you rebase the economy, and I'm just telling you how it plays out. When you rebase the economy, there's false comfort with the ratios. So I'll tell you that actually is not a problem because, look, we're a much bigger economy, and when you look at the ratios, you should be able to get your money out. So what anyone else is telling you is actually not true. Mm-hmm. And if you're a new investor and you're just looking at these ratios, you might actually buy into that story. Mm-hmm. So the thing is, with Zimbabwe, it's less about the numbers that you read, and it's more about the lived reality. You need to get into the weeds. You need to actually understand on the ground. Are people getting paid? Are people, because when you look at the ratios, you would think that it should be possible for government to pay out its TBs. They should have settled those TBs, but we know they haven't. Mm-hmm. But the ratios are telling us something.
Yep.
So I think that's the misnomer. And I'm just saying that it gives an incorrect picture. That's why I'm saying it's an ugly. Because it gives an incorrect picture. And it gives an incorrect picture to old and new investors. Mm-hmm. And I think that's not how we want to roll. We want to deal with reality and actually help the economy. And say, you know what? Because now you're going to say that we don't have a manufacturing problem. Mm-hmm. Are you going to argue that we have a manufacturing problem? I mean, we should ask Sekai and everybody else, do we actually have a manufacturing problem? Because for the last 10 years, that's what we've been saying. And then government has come back and said, actually,
that sector is pumping.
That sector is pumping. Okay. So I think this false comfort with the numbers is a big problem. The debt, I would actually say that a big ugly is the crowding out of the credit market by government. That's a huge problem, that government has crowded out private sector, and now private sector has found it necessary to get credit from outside. But a lot of that credit should actually happen in country, because if it does happen in country, it means that the GDP stays here and it's actually growing, and it's not happening outside. So I think that's a big ugly, that government is actually literally crowding out everybody in the credit sector in Zimbabwe. Policy credibility. How credible is this policy document from the Prof?
No, well, it's it depends on where you're starting from. Like, compared to, the forecasts and statements that we saw 2-3 years ago when, you had a local currency that was failing, this is much more credible, right? Mm-hmm. But that's a very low bar, because what we were doing 3 years ago was abysmal. Right? So, I mean, going through this policy statement, you could make sense of it. The professor was generous enough to actually share a lot of US dollar numbers, which is something that we used to cry about 3-4 years ago. And I think, that feedback didn't fall through the cracks. We had a lot of US dollar number reporting, which I think is fantastic. Where it's not great is that it doesn't look like there's been any meaningful policy shift between this budget statement and the last budget statement. And if you think that things are good or great, then what? If it ain't broke, don't fix it, right? Mm-hmm. But you and I I think we would agree that things are far from great. That we actually need to see a lot of pivoting in terms of policy action to unlock the true potential of our economy. So from that perspective, I think I would say it was a fail, because we didn't see any meaningful changes in policy. It's the same. If you read this policy statement and you read the last policy statement, apart from changes in some numbers and dates, it's the same policy statement, and we actually need some significant change to move the economy forward.
Good points there. I think for me, in terms of policy credibility, I think that we are losing it, and I will base it on the numbers. If private sector loans, external loans, have increased by 35%, there's something that private sector is actually telling us, that they actually believe the external world than the internal world, what is actually happening in our macroeconomic situation, and they would rather deal with the external world than this the current system that we have in place here. And to me, it speaks to the uncertainty and policy discredit over the last few years. And concurrently, it means that people are now banking outside of the country. And they would rather keep their money externally, whether in Botswana, Zambia, or South Africa, than be trading and to keep their money in Zimbabwe. That's why even the loans that they're now taking offshore loans. So I think, to me, that's the signal that I would use if I was a policymaker to say that we do have a credibility problem. The second credibility problem that we have is people who actually believed in us. So there are two kinds of people that have believed in the government of the day and in Treasury in particular. It's the people who have continuously supplied government over the years. $1.2 billion has not been paid out. And these are people who believed in us. What have we done as far as those people are concerned? That's number one. I have my views on what we should do with those people. But anyway, I'm not in government.
I'm sure you do.
But in terms of policy credibility, that comes in because we want to know, we supplied our goods, but that was, for the seed suppliers, that was 3-4 years ago. We haven't been paid. Should we really believe anything that you say at this particular point? That's number one. Number two, in terms of policy credibility, as far as Treasury is concerned, it's the TB holders. The guys who had their TBs mature and they were not paid out, and there was no statement whatsoever on what's going to happen to those guys. Has the minister spoken to them individually? But we as market participants, we want to know, what is he going to do? Because this year, we've got 785 million worth of TBs that are maturing. What's going to happen to those TBs? And in the next 10 years, we've got more TBs that are maturing. What's going to happen? And in terms of credibility, I think that they really need to give us some semblance of what are they going to do. Because I think credibility doesn't mean, if you're not going to pay out, credibility just means, just say it. We're not going to pay out. These are the problems, blah, 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 blah. And then we work through it. So that's what I would say. Because we don't have enough time, maybe let's conclude this.
Well, I think there's a silver lining in there. I think that not paying out TBs on maturity speaks to a challenge that the state has in terms of its liquidity, in terms of its capacity to meet its obligations on an ongoing basis. It means, one of the things that we say here a lot is that policy X is not sustainable, policy Y is not sustainable. And we say that, and, if those are true statements, at some point, you actually, the rubber hits the road where things start to break because they're not sustainable. And when you get to a place where you, and I think it's unprecedented. I think, previously there have been, Treasury bills have been restructured.
We eventually monetize it.
Right. Yeah,
so that's why it becomes a central bank problem, because we can see the cracks at Treasury. And Treasury has failed to address them.
Yeah. So I think the silver lining is it's a crisis. Right, so you've got unpaid creditors, and at some point it means your capacity to actually get whatever goods and services those creditors supplied becomes severely constrained or just stops. And typically, if you look at the historical precedent, when we've arrived at this place, we've just printed away the problem.
That's what I mean. We eventually monetize the problem.
And the fact that there isn't, yes, there is this talk of this monocurrency. I don't take that talk seriously.
That's how you monetize the problem.
Because I think, that whatever amount of credibility is left, if we print ourselves out of this problem, that will be the end. I don't think anyone will ever believe anything coming out of Treasury or the central bank if we have a third annihilation, monetary annihilation, like within 2 decades. So I think, to be fair to them and to give them some credit, they've chosen.
Should we run a poll?
It'll be interesting. Yeah, you should do that on your handle. So I think, to be fair to them and to give them some credit, they've had the discipline where they didn't have the liquidity to pay creditors to not just print wantonly, and it's a crisis. And my hope is that this time around, necessity is the mother of positive invention, where they say, okay, previously this is how we've handled these situations. It didn't work out well. Maybe we should handle this crisis differently. Maybe we should engage, capital market players locally and globally and say, guys, how can we resolve this? And maybe, we move away from what's clearly not been sustainable to something more sustainable. Is that likely to happen? Oh, the jury's out.
I think that's the big problem, because from a credibility perspective, again, I think that the minister failed to actually address these real problems. And previously, what we've done is we've then passed it on to the monetary sector, and we sort of wipe it away using inflation and using depreciation and currency depreciation, that sort of thing. This time around, I think that there's going to be a lot of tension, and we don't know really who's going to win. If I were the central bank governor, I would, I'll be adamant that he should just make sure that he doesn't solve this problem for them. Because previously, that's what we've done.
Well, printing is not a solution, by the way.
That's what we've done previously.
And I think, you see...
And I get the feeling that the reason why the Treasury doesn't want to solve this is because they're saying the solution is not with us. And I get the feeling that what Ntuli is saying is, look, my economy is growing. What I'm supposed to be doing, I've done. I've the numbers, the ratios. I've given you the ratios, and they look good.
They look great.
They look great. I've increased the fiscal space. Yes, I wanted to collect $10 billion US. I'm probably not going to collect that, but I'm collecting $7 billion US. Mm-hmm. And I haven't paid it all out because, I've been I'm under pressure. I'm under pressure, and I've kept some sort of austerity. So that I haven't paid TBs. Well, let's dig deeper. These are actually not my TBs. These were central bank TBs that I had to take over. Fair enough. Mm-hmm. But the solution must also go back to central bank. So I think that we're going to see a lot of tension between central bank and the fiscus to solve this.
As far as I'm concerned, if on the Treasury bill front, right? If I am holding a TB that's matured and I haven't been paid, right? Mm-hmm. I would rather be a debtor than wake up one day with a whole bunch of zig that, in terms of real value, just have a very short half-life in terms of just, they just degenerate and go poof in value. I'd rather have a piece of paper that says I'm owed X amount of US dollars, and make noise and complain and have conversations with my debtor, than to be paid in local currency a tiny fraction of the real value that I'm owed. So I think look, it's not great that TBs mature and are not honored, but I think the fact that we haven't had the indiscipline to just print is a good thing.
So your solution is to kick the can
No,
down the
my
road.
solution is not to kick the can down the road. I think it's
Well,
a crisis.
that's literally what you're suggesting.
What I'm actually saying is that the correct description of where we find ourselves is a crisis. And because you've got all these creditors who you have not paid, and I suspect some of them will have cut you off in terms of goods and services, and your capacity to actually go into the market and get new suppliers is severely constrained because everybody's like, and it's a crisis, and I don't think printing is the solution because it's just you're basically destroying your creditors' capital, and they're not going to supply you tomorrow if you print your way out of this. So it's a real crisis, and it's an opportunity, touch wood, for Treasury to do the right thing. For the central bank
What's the right thing? What's the right thing? What would you do?
So I think that we are at a crossroads where we ought to have an honest conversation about these challenges. Okay, and I think you alluded to one of the solutions, which is cuts. Right? We haven't been talking about cutting, but that's what we need to.
But if you're Treasury, you're like, why should I cut?
Because you don't. Because
my ratios are telling me that I'm doing fantastically well. So why should I cut?
But those ratios are fantastic on paper, but in reality, your creditor is can't go to their supply chain and their employees and people who they owe and say, look at these numbers, they're great. Just keep, right? So because you can't walk. An employee can't walk into a supermarket and buy bread and milk on. Oh, these are great numbers. They'll eventually pay. At some point, right? So you have. It's a crisis that and it has to be resolved. And I think,
and then Treasury will get back to you and say, Rufaro, that's a liquidity challenge. That's got nothing to do with me.
Well,
because what you're talking about is if the civil servant wants to pay and he says,
it's not a liquidity problem. If
he says that's a liquidity problem. That's not a fiscus problem. Yeah, as far as the fiscus is concerned, I've done what I said I would do.
No, but
that's not my problem. The problem now is it's a liquidity problem. The problem has to do with currency, and it has to do with the central bank and its legacy debts.
No, but the central bank, I'm your banker as central bank, right? That's what, if you're Treasury, right?
Yeah.
I'm saying to you, I'm your banker, right? Mm-hmm. You owe these people, your account doesn't have money. Make a plan. I'll throw it right back at you.
Then I would say to the banker, do you remember that loan I took over from you? Mm-hmm. Those are the same loans I haven't paid out.
Yeah, so
it had nothing to do with me. Mm-hmm. It had everything to do with you and what you did in the past.
Okay.
So the reason why I'm not paying these TBs, it's because it was actually never in my schedule. Mm-hmm. And that's why they're there. I'm not saying I won't pay them, but they're just not a priority as far as I'm concerned. Because as far as I'm concerned, I have to deal with my issues. These were your issues I took over. I agree. Those are your issues that I took over. Just like GMB subsidies and ZESA's problems. Government will say, okay, I'm taking over the problem, but it's not a priority as far as I'm concerned. Because I've got other ministries that are doing well, that have kept to their budget. You guys haven't. You're the problem child. I will deal with you, but at a later date. Right now, my big worry is this. These are the things that I need to sort out. So the thing about the central bank is that the chickens are coming home to roost as far as the central bank is concerned, because they created this problem. Maybe not John II, but the Reserve Bank as an institution. And there's another big problem that's actually at the central bank at the moment. Right? Their net foreign assets are actually negative, and they're going to have to pass those again to Treasury. So I think Treasury is also pulling back or pushing back as far as it can. But now you have this tension that needs a resolution. And unfortunately, they're pointing fingers at each other and blaming one another. And yet, there's a solution that's perhaps possible. I thought what you were going to argue is that the possible solution is let's do a comprehensive debt restructure. That we look at everything that we owe, and we look at the now about $22 billion that we owe, and let's actually now say, you know what, let's focus on a solution around the debt restructure. So the domestic debt, everything, and we just do a solution. Because when we do a solution, we then create the fiscus and monetary breathing space that we actually need. And there's no better time. I do agree with you, this is a crisis, but there is an opportunity in the crisis that in the next 6 months, if we're fully dedicated to debt resolution, then we'll come out of this. Because we will actually create the necessary fiscal space and monetary space. And if we don't, I believe that in the next 18 months, then we're pressing the restart button. It will be full-on monocurrency.
Yeah, so
because you know the story about the scorpion and the frog.
Yes.
The river.
Yeah, I know the story.
Yeah,
the fable.
It's in my nature.
Yeah.
That
So
if we don't solve this in the next 6 months, we'll go back to our old nature.
Yeah. So I think what you're saying is not, and my suggestion for cuts are not mutually exclusive. Right. And I think, part of the conversation, is you've got to acknowledge that we live beyond our means, we're profligate, and there's going to be some pain. Right. And part of the conversation is actually sitting down with creditors and saying, hey,